This is the exact strategy I use to chart the most important areas to trade on any ticker. Most traders focus way too much on too many levels and too low of time frame action. These are weak levels that set up weak follow through and low win rates. To be the most successful, you want to focus only on key areas to see a higher win rate and stronger follow through. In this video, we will cover how to chart strong key levels, how to trade technical chart patterns, and basic price analysis tools that will add edge to your trading every single day. To find key levels, you want to start by adding support and resistance levels from the 4-hour, 2-hour, and 1-hour time frames. Now to do this, for resistances, you're going to look for large rejections, which led to big sell-offs, and for supports, you're going to look for areas where there were large bounce reactions. So if I'm looking at this chart, I'm looking at areas where there was a strong rejection, where price had a strong sell-off, and I'm also looking for areas that have the best confluence between multiple touch points. So instead of just marking the all-time high with resistance, I'm going to look and see if I zoom out that actually this area has more points of confluence where price was unable to hold above this area, saw rejections, saw a hard test, and then other multiple hard tests that all line up. This is a key level, 62.15, and remember, you don't want tons of levels, you just want the most important on higher time frames. So now if I'm looking for another resistance, I'm looking for other areas that were rejected. So we have some rejections here, we have a rejection, an obvious swing high, price made a big move up into this and was rejected. So I'm trying to find the area that has the most confluence, somewhere in here where I can see that price was unable to hold above. We rejected here, we rejected a swing high, and the other thing I like about this level is that we also have a little bit of confluence where this is also a little bit supportive in this area and a resistance here. So these touch points, the more touch points that you have of confluence, the more confidence you can have that this is a strong key level. Now I use the same idea when looking for supports, except I'm looking for areas where there was a strong bounce, a large reaction to the upside. So if we're looking at this, we can see some obvious areas, demand here where we saw large bounces. And again, I'm going to try to find the areas where there's confluence between multiple points. So here we saw 2 large bounces. We also saw some bounces in this area. And the thing that I like about here, we have some obvious areas where price sold down and saw a very strong bounce reaction that trapped underneath and then bounced here. And then the other thing I like is that we have a bit of a shelf in this area where we have some more confluence in this area. So I keep looking for areas where I see some bounce reactions. Now there's a lot of price action. Remember, these are higher time frames, so I don't have to have a level on any tiny bounce here. But if I see something like this where this area, I see a few bounces here, I see a trap underneath, you see that this area was actually resistance, it rejected, and then we saw a move up after we cleared this. So you see something that was resistance, then became support, had multiple bounces here, and then again when this failed, then this acted as resistance again. So all of these points of confluence give me a little more confidence as a higher time frame level. Another concept to keep in mind for a high time frame key level is an area that was resistance, and then when price was able to break through that, we saw a large trend move. So that's what we see here. Not only do we see an area where there's multiple bounces, strong bounces here, but we can see this area was obviously resistance, big rejection off of this. We based underneath this, and then once we broke out, we began to see a move higher from this area, and then it held on the back test. So this is confirmation that this area was resistance. We broke it out, we saw a move higher, and then we held it on the back test multiple times. Look at all the touch points on this. This gives you a lot of confidence, and especially when something is resistance, breaks out, holds the back test, makes a big move higher, sells back into it, and then holds it again for another very large reaction here. Another concept I like to use for key levels that I keep on my chart are prior areas of a basing structure where you had multi-day or multi-week range where you had a clear support area here around 58.50. And then you had a clear range high 59.26, and price spent a lot of time rotating back and forth between this, where any pops into this area were rejected, pops above were sold and failed back underneath, and we spent a lot of time in this. So prior range lows and prior range highs, especially ones that we break out of, always keep those marked on my chart as well. Now let's talk about the most common and best quality chart pattern, the bull flag. There are tons of chart patterns out there, but most don't have any actual statistical significance, but the bull flag is one of the best. Now, it does have to be drawn correctly. So when you see a series of lower highs like this, you can draw your trend line here, and the best thing to do for this is to take that and clone it, because you want the bull flag to be parallel. Line that up. And now you're also probably trading the bull flags incorrectly. So you want to use these as structure to trade around, where you know that if you come into support of a horizontal resistance and bull flag support, you're more likely to get a bounce. If you fail the bull flag, you know that you're potentially going to sell. If you break out of the bull flag, you know that you're potentially going to get a trend move, especially if it's in continuation, where a trend move up, bull flag, break the bull flag out, and see a trend move continuation higher. Also, if you trap underneath and reclaim a bull flag, that's a great area to go long, targeting the top of the bull flag. So that's the way you want to use it. Just because you see a bull flag doesn't mean you should automatically go long and that we're automatically going higher. Also keep in mind that low time frame patterns are going to be much less valid and are going to play out and invalidate themselves much quicker. So a little 5-minute bull flag, not going to be very statistically significant. This is a very large multi-day bull flag on the 1 hour time frame. Even a bull flag on a 15-minute time frame that takes place over a couple hours would be much more significant than just one on very low time frames. And even better, when you have a bull flag on higher time frames like this, this channel and trend line does tend to respect even later on when you have confluence on the back test of this bull flag and 58.53. So nice confluence here for a nice bounce and hold off of here, the next leg up. And same thing with a bear flag. Again, you don't want to use this and automatically say, oh, this is a bear flag, so we must be going lower. You just use this as structure, and if the bear flag breaks down and makes a low underneath this low, then you could see a potential sell. Otherwise, until the bear flag breaks down, it's meaningless, and most of the time it just makes a V-shaped recovery or breaks and invalidates the top of the bear flag and continues to go higher. So that's how you want to use patterns. Use it as structure. Use these as support and resistance here, and the confirmation of a bear flag is not until the support fails and makes a new low below this low. Now that we have our key levels, let's talk about how to trade these. I'm only interested in the action around these key levels. I don't care what happens in the middle. This is just trop, and it's not good to trade around. So what I'm looking for is trying to interact and engage right at these key levels. You can be long off of support. If you have a large sell into support, you can be long off of support for a bounce. If you've had a large sell directly up, you can be short off of resistance at your key levels. If you know this is a key resistance, you know that you don't really want to be starting new longs right underneath this into this area. You can take, if you have a resistance here that's rejected, we flag underneath and then clear this, and then you can look to be long on the back test. Or if you've had a bounce here on the back test, then you trap underneath that. You can be long back above this key area, targeting the next resistance. That's how you can trade around these areas and eliminate all the poor quality trades in the middle of these areas. If you have this key support that held for a bounce here, and then later on you trap underneath this and get back above for a failed breakdown, you can be long on a failed breakdown from here. Another example, just great trades are set up when you focus on trades around these key levels and not just low time frame minor levels. Now, the last thing to remember is when you're actually trading around these levels on lower time frames for intraday trades, just because price tests above this key level for a few minutes does not mean that this level is broken and that you can go long on a breakout above this resistance. This is a high time frame key level. All of price action is always a process, so we rejected this resistance, we tested above, we're still unable to clear this, and we sold. Just because we popped up here for a few minutes, this does not mean you can go long here. Keep that in mind as you're trading this. The same goes for when price is testing a support. This entire process is the process of testing this 58.53 support. So price sells down into it, attempts a bounce, traps underneath a little bit and bounces. All of these bounces, this entire thing is the process of this back test, and this entire process is part of the bounce. So just because price tested underneath this does not mean the support has failed. You don't want to be shorting there. This is all the process of the bounce and of the buyers stepping in here and trying to keep this area bid. The final piece of charting to prep for your intraday trading is to mark your overnight or prior day low and your overnight or prior day high. This gives you structure to work with that shows you that in order to have continuation down, price is going to have to hold underneath the overnight low or the prior day low, and if price tests underneath the overnight low and is able to get back above and get above your key level, this is a long on a failed breakdown and targeting the prior day high. And if price tests above the prior day high and is unable to hold above and fails back underneath, this shows you a potential short setup on a look above and fail of the prior day high, and it also gives you targets and structures to trade around, many different ways to do this. So add these low time frame intraday levels in addition to your high time frame key levels. Now let's talk about some price analysis basics to add to your charting of key levels and your technical analysis patterns. Remember that a support or resistance gets weaker with every test. So every time we bounce here, it's weaker, it's higher risk, it's more likely to fail. Eventually, when a support fails, you can see a breakdown trade where the support fails and you get a sell-off. After you get a sell-off of a support, that support area now flips to resistance. You expect that to be rejected on a back test. If it's rejected and sees continuation down, you can see further selling. If it's rejected and price returns to the area and is able to clear, this is a reclaim of prior resistance and you'll see a short covering momentum move. Understanding that support then flips to resistance is extremely important in understanding how to trade around these areas intraday. And then if it's reclaimed and you see the strong move, it's now once again support and may bounce on a back test. Combine all of these concepts of charting key levels, technical analysis patterns, and price analysis to take your trading to the next level.